Good afternoon. Welcome to Invest's webinar on impact investing and education. This is a bi-monthly series which was previously hosted in person as a dinner and for obvious reasons is now virtual. This has created actually an upside for me, which is that I can have guests, my esteemed and admired guests here in 3 different countries. I have Matt in New York in the United States. Hi, Matt. Santiago in Colombia, and Laura in Sao Paulo. I'm hailing from Miami, Florida, and thank you all again for joining us. There's so many amazing people who joined us for this call from all kinds of backgrounds, educators, ecosystem builders, investors, and family offices, as well as financial advisors. So thank you. I think that the sign of the attention to this issue and interest in this event is really part of bigger goings on in the world, including of course, COVID bringing education home to everyone, as well as a big change in the approach and interest in sustainable finance. I am Julia Wilkinson, the founder and CEO of Invest, and what we do is capacity build financial intermediaries to impact invest. We also act as startup advisor and angel investor in some cases to high impact startups in the space. My background includes 13 years in capital markets, including private wealth management, private equity, and venture capital. Your guests will introduce themselves shortly. And in the meantime, I will explain a little bit about impact investing and the goal of this evening. So our goal is to educate, inspire, and capacity build all of you to impact invest with these resources of these amazing speakers to help you do so. Excuse me. We are leveraging the timely theme of education to discuss this. All of you on the line probably either have kids or understand that 90% of schooling has gone from in the classroom to at home over the past several months. So people are now homeschooling, learning new technologies, and having to adapt to the times very quickly, creating a massive room for disruption. And we are more aware than ever about the experience our children have with education, the quality it delivers or not, and the interfacing that they have with different technologies to do so. So you'll hear from our featured guests who share their journey to impact and why they decided to invest in education. Before we get started, however, give you a few highlights of what we'll do during the event. The first 50 minutes to an hour will be a discussion with the group here, and we'll open it up to questions for the last 15-20 minutes. If you have a burning question in the meantime, there's a Q&A section here at the bottom of Zoom. You can submit your question and we can address it at the end, or we'll open it up for you guys to actually be able to speak directly to the panelists. If you want to share who you are and why you came to this, please feel free to do so in the chat group. Lots of interesting people there, so feel free to connect with them as well. And before I get started, I always do a quick poll of my dinner audience, which we can't do in detail today, on what impact means to them. So I'm going to put up the poll. Obviously, it doesn't include every answer on earth, but please take a look and see which one you connect with. And as you see, there are many definitions to impact, but I'll ask my 3 speakers to pick their favorite while you guys pick yours. Can you guys see it? Cool. Matt, you want to go first?
Sure. So I'm Matt Greenfield. I'm the co-founder of a venture capital firm called Rethink Education. And I'm also a former college literature professor. Rethink Education is one of the few venture funds run by 2 published poets. So I came to the problems in education first as a teacher who was teaching students from every income level, from all over the planet, struggling to find their purpose in life and use the educational institution to move towards meaningful work, and not getting a lot of help from the institution. And along the way, I started encountering opportunities to invest in companies, and then I ended up starting a company focused on children with autism and special needs more generally. That company was actually just acquired on January 2nd for $210 million. took a while, 12 years. And the idea that I could do something about these problems in more than just my own classroom on a scale that would affect hundreds of thousands or millions of students was kind of intoxicating. And so my first discovery was that there were solutions to problems. And then my second discovery was that there were some huge financial opportunities. It had become a lot easier to start a tech company of any kind because of the cloud platforms. And there was a huge influx of talent into the education sector in particular. We have one chief technology officer who lives in Brazil, who left one of our companies to take a job that paid him 3 times as much. And then after a year, he came back. So that's the level of pay cut people will take to work for a business with purpose, which is a real advantage for businesses that have a strong social mission.
Awesome.
And then the last thing we realized was that most venture capitalists were looking at education with a number of misconceptions. They thought they were being hard-headed and financial, but in fact, they were doing things that were ultimately self-defeating. Impact in education, if you are not focused on all your stakeholders, you are headed for serious trouble with regulators, politicians, and reporters.
Thank you so much, Matt. Before we go too deep on the other 2 speakers' bios, which word on the poll do you most connect with in terms of impact, Matt?
Alignment.
Alignment.
Yeah. So I think what has been wrong with a lot of, particularly traditional higher ed, is that the school got paid whether or not the student got a decent job. And sometimes that made them very careless about thinking about what it is that employers are looking for.
Fair point. Santiago, which word comes to mind? And you can give a brief intro. We'll go a little bit deeper on that to follow.
Thank you, Julia. So for me, we saw the future. And I really think, yes. And I really think is that, impact investments are the future because as we're seeing, during this hectic and challenging days, we cannot continue sort of living as we have over the last few decades. And there is a real need and there is a real opportunity sort of to shift the way we've been operating from a shareholder perspective to stakeholder perspective, which I think is aligned with what Matt was saying. And I think that's something that now is and the current crisis is presenting, that is no longer kind of an option, is a need, and it's a must. So that's the first word that came to mind.
Thank you. And you, Laura?
So for me, I think the word that struck first was progress. And I think it has a lot to do with what both Matt and Santiago mentioned. We're in a situation worldwide. Problems are becoming so increasingly complex that you can't really address them from a single side or from a single institution. And so everyone has to do their part, and it's clearly calling businesses to think about their role in society from a different place. So, yeah.
Wonderful, thank you. So as you see, you can see the results here. I think we have progress winning, with opportunity, common sense in the future, alignment, all of those. And luckily no one's saying, well, one person saying more risk, but we'll address that as well in the conversation. So quickly, before we go on with the speakers, I will briefly give a refresher of what conventionally is defined as impact investing. It is defined as intentionally and measurably investing towards financial goals as well as social and environmental goals. So the intentionality is very important. It's not a byproduct, it is the goal itself. You can target market rate returns and be an impact investor. You could be concessionary or focus on impact first, or you can really be practically philanthropic where you're just investing in a pioneering industry or in sort of seeding the future of a certain industry. So I have a quick other poll just to understand kind of who is in the audience. And hold on one second, it is right here. So I just was curious, you know, if there are already, sorry about that. If there already are impact investors in the audience, or who exactly is here. So please answer, and I'm curious about that as well. And while that goes on, I'll just mention why a few other reasons that I think impact matters. You've heard some from our guests already. Post the financial crisis, we witnessed how short-termism and misaligned market incentives could bring down the entire financial system. So we saw a pressure to be more transparent and accountable at the corporate level, in the banking industry as well. So institutions started to reshape themselves towards what we now call stakeholder capitalism, which in my opinion helped prepare the economy and the world for the exogenous shock that we now face with COVID. So we did not obviously expect that, but institutions were well capitalized, the system was in relatively good health, and a lot of people were already aware of prioritizing different parts of the stakeholder value chain outside of just the shareholder. To sort of point to the outperformance of people investing in, at least in ESG, we don't have as much, or environmental social governance in public markets, we don't have quite as much visibility yet on the private side. Those that had strong risk management and adaptability embedded in their business have outperformed the market by at least 100 basis points. And public companies that prioritize the people, the social aspects of their business outperformed, according to Morningstar, by 7%. So that's quite a massive amount. As you'll hear more from our speakers, the massive disruptions from education, in education due to COVID include all institutions suddenly having to move to blended learning offerings, which include in-person and online. Suddenly managing all of their work requires a platform, online platform management tools, of which many existed but now are being used across the world. And of course, alternatives, which we already saw issues with traditional degrees, the cost, a job readiness, and now you're seeing an even more pressure with tons of people unemployed, a shift already occurring to autonomous industries that will require less workers, so that we need upskilling more than ever and reskilling, and our speakers will address that as well. So companies with the most advanced online platforms already may have been better positioned and be better positioned to take advantage of this opportunity going forward. So to learn more about these themes, we'll turn it over to our guests. Oh wait, let me just end our poll here and show you the results. So we have a fair amount of impact investors, VCs, educators, students of life, I like that, and of course, financial advisors and parents. So thank you for sharing. Matt introduced himself a little bit, but I'd love to hear from Santiago and Laura, you know, who you are, what you do, and what is your impact investment thesis. In that, please tell me if you're market rate driven or how you view your market return spectrum. Laura.
Laura.
Oh.
So my name is Laura. I currently am head of investments in education and impact in a private equity fund, which is part of a family office. So we came into impact actually from the very traditional part of investing. When we started the fund, we always wanted to invest in impact because we were looking for, it wasn't really, it didn't have a frame that was structured, but we were looking for trying to use the capital that we had to actually drive some impact positively. We didn't call it impact at the time, but it was really what drove why we chose to invest in education from the beginning. My background before that is actually in management consulting, and I've been working with responsible investing for the past 10 years. So it's very good that we finally are reaching a point where this is, you know, so much in the topic, and so many traditional institutions are starting to look into impact and ESG as a way of driving more profit, which is really where we came into it. So we have a fund that is not just impact, but currently most of our assets are impact. So it's more than half are impact investments. And when I mean impact, it's very aligned to what Julia was saying in terms of businesses that intrinsically in their products and services, they solve a very important social or environmental gap that we have. So it's very intentional. And we are looking at it from a very market return standpoint. So we haven't had exits yet. So we're still going to prove that, but we're not looking at it from a concessionary standpoint. We also have in the family office a foundation, and they drive the philanthropic investments that we have. So, you know, we do look at it from both sides, but our fund is really much in the for-profit, but also looking into impact very strongly and growingly, which makes me very happy.
Thank you, Laura. Santiago?
Thank you, Julia. So yes, I'm co-founder and managing partner of Acumen Latam Capital Partners, which is a private equity impact fund with seeking sort of market returns. But we're part of the broader Acumen family, which has probably many of you've heard is the one of the pioneer impact investors globally, founded over 20 years ago by Jacqueline Novogratz, and operating over the last 20 years, across different geographies, including India, Pakistan, East Africa, West Africa, and then operating Latin America for about 6 years now. The Acumen global organization is a non-profit organization, and they have the one strategy that is a philanthropic backed investment fund. But then over the years, there's been an evolution as well of Acumen, in which they have been involved in the sponsoring and developing other type of impact vehicles to support entrepreneurs at different stage of their growth trajectory. The Acumen Latam Capital Partners is the vehicle that invests across Latin America in companies that are we call it in the early stage growth. So they have already proven business models and are on a path sort of to scale. And we do that, by investing investors' capital in this type of companies. Our impact framework or impact approach is really at the forefront and at the core of our investment thesis. For us, we see impact as a competitive advantage and not a sidecar or a consequence of business. But really what we try to do is sort of to invest in companies that they have their impact thesis embedded in their business model. And so there is no really sort of fight between growth and impact or this kind of discussions that sometimes you get around in the impact space, because when the impact is embedded in the business model, we truly believe that as you grow and as you scale, then your impact also grows and also scales. And I think the case of education is a very good example sort of to exemplify that thesis, and happy sort of to share that later today.
Wonderful, thank you so much. Matt, do you have anything to add in this section, or would you like me to move on to the next question?
So two things about market rate returns. I'm not a market rate return investor. I would shoot myself if I were just getting the market rate of return, which in venture capital is not so great. There are a couple of reasons why I think impact helps deliver superior returns, and I agree completely with everything Santiago said. And one has to do with risk mitigation, right? The risk that if you're hurting some stakeholder and taking advantage of them, that will catch up to you. The regulators, the politicians, the journalists will come after you. But also, there's the question of whether you're going after a real problem. So the biggest single killer of venture-backed companies is that you build something that nobody cares about, that doesn't solve a real problem for anybody. That's the number one reason that startups die. And my firm makes a lot of mistakes, some of them repeatedly, some of them are sort of a necessary consequence of our model, but we've never invested in anything that wasn't addressing a very large, real social problem with real human suffering attached to it. And I think that has something to do with the relatively low loss ratio that most impact investors have. So our first fund launched in 2012. It's made 20 investments. It's had 8 positive exits, and it's only had 1 realized loss so far out of 20. And that's because whatever else they did wrong, those companies were all addressing real social problems. And so when you're an ordinary venture capitalist, you're looking around and you're trying to find some sort of vacant space, right? What kind of social network or analytics company can I build that hasn't already been built? Whereas when you're an impact investor, you're looking around, you see all these titanic social problems that are not getting solved.
I think I really like your point, Matt, and I would just sort of add another great example of that sort of philosophy, which is, you know, at least in our experience, how resilient our portfolio is being under the current conditions and under the pressures of COVID. When companies are really sort of solving social needs or are providing goods and services sort of that are most needed by the population and by the vast majority of the population, you know, which is not that top quartile of earners, but really sort of you know, the low and middle income population that across Latin America represents over 90% of that of the population. Then you get businesses that are really sort of resilient to this type of crises, because they, despite the challenges of operating, and you might get challenges, you know, in terms of how you provide your services, and you might need to adapt to that. But if your service is essential and is benefiting the population, then these companies are finding ways sort of to continue operating, to continue servicing their clients, and being resilient, and even finding great opportunities sort of to scale and grow during this crisis, which I think it was just it's another example on how, you know, this provides sort of a risk mitigation and a completely different risk profile to what most traditional assets sort of can offer in the market.
Thank you. That's a great point also, Santiago. And maybe fleshing out a little bit this story of the journey to impact. I would love to hear from you guys, you know, what were some of the transition points that were most difficult? I realize Laura's will be a little bit different than Matt and Santiago's, but in terms of putting the time in to make a decision about what values to prioritize, how you chose education as a priority, and what were some of the obstacles? Is it, you know, getting everyone on the same page, educating people, finding companies? What kind of was the part that was the most challenging and the most difficult to manage over time? And I think Matt, you and I have also talked about building a team and some of that, the elements of that piece, finding people who are the right visionaries to bring to the table. So if you guys could each touch a little on the journey, that would be great. Who wants to go first?
I think a little bit, since my story is a little bit different. So we are a single family office, and as a single family office, we invest in very different strategies and asset classes. So we invest in real estate, we have a hedge fund, we have the private equity part fund, which is where I work, and we have public equities, and we have the foundation. Essentially, that's the 5 things that we do. And when we structured the private equity side and the direct investments part, we were looking for how we could contribute as investors, not just as financial capital. And education started already from the beginning, being part of the conversation. Again, we didn't frame it as an impact fund, but the fact is that we were looking for project and businesses that could have, you know, quality, but also access. So we were never looking into you know, very premium and not accessible solutions towards education. It always had this thing about breadth and quality. And so that really drove the conversation from impact from the beginning. Something that helped us a lot was personal interests actually from our shareholders. So, you know, we had shareholders that were sponsoring a lot of this understanding that we should use the capital, not just to drive profit, but also to have some kind of impact. So that was always on the table from the beginning. And it really has been a journey. So I have a friend that said to me, you know, ESG and responsible investing is not a product, it's a process. And I think that really makes sense because it really is a process. And each year there's a new development. Something that really helped us as a single family office and not being a professional fund is the fact that we were born as an evergreen fund. So we don't have to, you know, fundraise and then deploy the capital and then exit the fund and exit investments maybe before the good time, you know. So we have timing in our favor, which is something that particularly in education is very valuable because as we know, sometimes it takes 12 years and not 7, you know, to be able to really drive the growth. And so when we started talking about this to our entrepreneurs, they were like, I really like the fact that you are evergreen and you can be a patient capital. And so that's something that really helped. And that I think that's something that families can really bring to the table. So we really see our role as, you know, something that helped as a changing point was when we framed our role as a local institutional investor. And we really stepped into that role of being an institutional investor. And that's when we started to be able to embrace the fact that we're looking not just for financial returns, but we're also looking into impact. And then we started to name impact and develop a responsible investing policy. And we became PRI signatories. And each year there was a different development that made us today, you know, out of the 9 investments that we have in the fund, 7 are impact investments. And we never had we have to invest in impact. It was, we really used the same metrics to look at the traditional investments, or it's the same exact process. So we're looking at investments from and our analysis is very in-depth because we're not a venture capitalist. We're not going to invest in 30 different companies. We have a much smaller portfolio. So we really take time into looking into these companies. And so that's a little bit of our journey. And yeah, I think that tells a little bit where we're from.
Thank you, Laura. Matt?
Well, I had a venture career before I got my PhD in English literature, and I made some successful investments in communications equipment companies, and it just didn't feel good to me. It felt inauthentic. I didn't feel a calling to invest in communications equipment. And so I went back to Yale and got a PhD and then started teaching. I taught for a total of 10 years. And the students sort of pulled me into it. They were suffering in various ways. And the realization that some of their problems, not all of them, could be solved at scale with technology was kind of wonderful and dazzling. It's hard to go back once you've tasted that.
I love that. And then you formed your current fund after you were teaching it at Yale, correct?
Well, I taught at Yale while I was in graduate school. Then I taught at Liberal Arts College. Then I taught in the City University of New York system. And then I started doing impact investments for a little while. And then I realized that the world didn't need me to do general impact investments. It needed me to invest specifically in education businesses.
And your first fund was in what year again? 2012, right? How big was your first vehicle?
So this is actually a mildly interesting story from this standpoint. We had a $12 billion family office. It's going to be our anchor investor, and we had lawyers drafting documents. And I think I realized this before my partner Rick did. I said to him one day, "We can't take their money." And so we walked away and had a somewhat smaller first closing than originally planned. It ended up being $25 million. We rolled over gains from two of our previous investments in the education sector and became effectively our own anchor investor. So that was a $25 million close. Eventually that fund got up to $58 million because it kept raising for 18 months. The second fund was 107 million. We still haven't finished raising the third fund, but it's 100 million, just about exactly.
Amazing. Congratulations. And that's because of your great success that you've been, I mean, your portfolio success through impact is what in part has driven so much, you know, your ability to fundraise at scale like this, correct?
I think we've done a terrible job at fundraising. We keep hiring someone to do it who keeps not doing it. A number of people who sounded extremely plausible up front. I guess I'm sort of coming around to the realization that I guess I just have to do it myself. Fundraising is funny. It's sort of like you can try to force it. You can try to. I can try to sell a family office that is not interested in impact. It just doesn't work, really. I mean, sometimes they're interested in education as a sector because they think it's just interesting for investment. Everyone thinks education and the future of work are interesting right now. But they tend not to stick around if they don't buy into our mission. It's not that the returns aren't good. It's just that there's so many other things they could invest in, right? This year it's EdTech, next year it's cryptocurrencies.
Fair point. Santiago, how about you? I mean, you mentioned a little about Acumen Fund, but you've had your own interesting path to developing this for-profit vehicle.
Yes, Julia. So, I mean, it's a different story sort of to one that Laura and Matt shared, because, you know, we definitely, the sort of the incubation of Acumen of our vehicle has or created sort of a wealth of knowledge that really influenced sort of our strategy. And so a couple of comments there sort of to share with the audience is that, you know, it's been 20 years since Acumen was founded, in which, you know, started sort of this impact investing thing. And over those 20 years, there's been many learnings. And some of these learnings is that, I mean, not every sector, not every sort of impact strategy is suitable to investment. Some of them are really just suitable to philanthropic capital. Some of them need to be, you know, incubated or they're just, you know, not everything is investable. And I think that is important sort of to acknowledge and to address from the beginning, because for us, that also relates in terms of sectors. Not all sectors, and depending on the geographies as well, are investable as impact investments. There are, for example, with our experience, you know, it's different sort of to approach Africa, for example, if you want to do impact investments, than if you're approaching Latin America. The depth of how governments are involved, for example, play a very different role in terms of how the markets have been developed, and therefore also how the businesses are sort of trying to address the market gaps, right? And so we came in Latin America, you know, after Acumen had experiences investing in many different sectors, such as healthcare, fintech, water and sanitation, access to energy, and many more. We came to the conclusion that actually we saw opportunity in only 3 sectors, which are agribusiness, access to energy, and education. And that was the result sort of a very sort of thorough analysis of trying to understand, on one end, what are the needs of the population. I think going back sort of to Matt's point and what I was sharing before, that, you know, we would only invest in businesses that are addressing real needs of the population. So it was really important sort of to understand that. And when you look sort of at Latin America, then you realize that the biggest challenge is inequality. And the biggest challenge the region has in terms of is sort of creating that inequality is the poor quality of education. You might have countries where you can argue there is universal education, but the quality of education is extremely poor. And therefore you have private sector saying, I cannot find the right talent sort of to fill the capital needs that I have to provide, you know, formal, stable jobs. And so when you realize that sort of there is a huge need, and also you look at the market and you look sort of the market trends and sort of the evolution of technology in terms of education, in being able sort of to provide pertinent education, non-formal education in a very low cost through, you know, like blended models or online models, so that you can reach so vast amounts of the population, then that's when sort of you do the match, right? And that sort of really sort of took us to decide that for Latin American specific, education was an impact sector in which we would find very interesting opportunities, business opportunities, and that would be addressing a huge need and a market gap. Same for us was happened sort of with agribusiness and access to energy. But for example, it didn't work for us to invest in healthcare in the region. It didn't work for us to invest in water and sanitation. And you know, that's a long story, which probably is not the point. But I just wanted sort of to come across that it was really sort of the convergence of market needs and business opportunities that we saw in the region.
Excellent. And to that point, Mike, oh, Laura, did you want to add something?
I just wanted to add something quickly. I think there's a lot of similarities, Santiago, with where we are looking into education. And just add the fact that, plus I think there's at least on our side, a view that there's a role for the private sector to play to help find these solutions to drive the quality, because the solutions won't come just from the public sector. So, you know, innovations, bringing, you know, technology into the classroom. These are things that are typically from the business side, you know, from the private side. So the sense of complementing really the efforts for you to actually find a solution for a problem that, again, is too complex for just one of these to find, to address alone.
It's great if you can unlock government capital in a new way. And we've seen startups do that. There is a lot of government capital out there. But there are also, you can find synergies in the private sector that one would never have imagined. It's like the unleashing the energy of an atom. Something small becomes very big. We have an investment in one company that helps corporations offer education as a benefit to their employees. And in the US, there's a tax deductible $5,250 contribution that an employer could make. And they persuaded companies like Walmart and Disney to do this for the very low paid frontline workers, many earning less than $30,000 a year. You couldn't persuade them to offer an extra $5,000 of pay. So why did they offer the $5,000 of education benefit to anyone who wants it? It's because it results in improved retention of those employees. And that retention has a measurable financial benefit. And it's in excess of a 170% annualized return to the corporation, because the employees stick around and you don't have to recruit new people and train them. I wish I could find more things with a guaranteed 170% annualized return. That's a very powerful business model.
And can you give us a few more examples of companies in your portfolios and how they've benefited from COVID or been challenged therein? I know Santiago and Matt have a co-investment in Brazil, and Laura has some great stories as well. So perhaps you guys kick it off with the co-investment, if you don't mind.
Sure, happy. It's actually a co-investment in a Peruvian company, but that is already sort of operating across Latin America. This is a very interesting example, because this is exactly it's a company that exactly reflects sort of the market disruption that is bringing sort of to sort of the vast majority of population that they have access to very poor quality education. You know, this company, what they do is that they have created sort of a business in which they provide sort of to the public very I mean, short courses, but online. This is everything is 100% online. And but the content that they're providing and that they're offering sort of to students is being carefully chosen to be highly pertinent for the students to then either be able sort of to apply to formal employment in the creative industry, or to work as freelancers, which sometimes is even a greater opportunity. And so, you know, this company is already have over, they have over 2 million students as part of the platform. As mentioned, you know, they go from Mexico down to Argentina, even a small footprint in Brazil, operating also in Spain. And they have a product that is very low cost, but extremely good quality, which is having a tremendous impact on the lives of their students. You know, because clearly with the COVID, you know, where you have everybody staying at home, in which everybody's thinking, you know, in how they can be prepared sort of for the market. They can, you know, many facing layoffs and so thinking sort of about the opportunities or how they can, you know, find better jobs at the, once they see the light at the end of the tunnel. This has been an incredible good source of accessing very low cost education and very high quality and pertinent education. I think, you know, like one of the biggest cultural barriers that we face in Latin America is that we have a very traditional education system that is also heavily regulated. So, you know, like all governments, they have to approve which institutions can provide or can grant different titles and so on and so forth. And when we live in a world in which the private sector is no longer really valuing those titles, but actually is more interested in the skills that students or that the people have, then a company like this is just providing a very incredible, very affordable and cost-efficient solution for people to reskill themselves and access better opportunities going forward. I don't know, Matt, if you want to complement it. We've been co-investors for about almost 2 years now.
I think you kind of buried the lead. For those people on this call who are skeptical about impact investing, during the coronavirus, which has been disastrous for many businesses of different kinds, this business, which did $2 million in revenue last year, has jumped to an $11 million run rate in less than 6 months.
Incredible.
Yeah.
And how have they managed to avoid sacrificing quality as they scale?
Well,
if they have been able to.
they can sell the same course to a much larger number of people.
Right.
It's largely automated.
Okay, great.
And Julia, I mean, the great advantages sort of these businesses that are leveraging technology is, you know, is that their core expertise is in how sort of to produce content, but they do not employ any teacher. They just know how to produce very good content. They have developed that skill, and then they identify what are the topics that are really in demand, and they bring on board, you know, the expert of, you know, the leading company sort of in that field, and very rapidly, in a matter of weeks, sort of they can develop sort of very good content and pertinent that is adapting sort of to the current conditions. So even with the crisis, you know, in a span of a couple of weeks, they were able sort of to adapt, to offer solutions to companies, to offer solutions to the government as well, to offer, you know, also feeling that they needed sort of to contribute to the benefit of the population, then creating scholarships for people to be able, or for students that were staying at home, sort of to access some of the free content. So these are companies that are very flexible, highly adaptable, that they have identified what are they good at, and which is something in which you know, they probably are the best or one of the best doing that, and from that they can grow and expand. They're not trying to be the best at everything, but at what they are just extremely good, and that allows them sort of to scale, maintaining sort of their core product or their core differentiation.
And since both of you invested in different vehicles, how do you guys define, or how do you measure impact in that particular investment in terms of the quality, or however it is that you decide to measure? And what role do you think you've played as impact investors at helping them perhaps prepare and navigate this crisis?
Sure. So, I mean, as I mentioned at the beginning, you know, like for us, impact is really at the core of our investment thesis, and is really sort of all investors that are backing us. For them, this is also really important. I've always said, you know, if there is just a mainstream traditional investor sort of that is assessing sort of two investment opportunities, I'm sure they will be able sort of to find a better opportunity, you know, if they only look at the numbers than us. I'm convinced of that. Having said that, there will be only like the ones that have backed us is because they really sort of are fully committed to achieving both. And that's why we take a very, very sort of careful and detailed approach to measuring impact, to be able sort of to communicate to these investors what their capital is achieving or is supporting to achieve. And so for in the instance of Creana, you know, after as soon as we invested, we brought on board 60 Decibels, which is a spin out of Acumen. That is it's a company now dedicated sort of to measuring impact, actually using technology as well to do it in a low cost manner, and we performed sort of a very thorough and in-depth impact study to assess 3 different dimensions. And I won't go into detail because I know we're short in time, but basically, you know, we measure what we call the breadth, which is the number of students that benefit, which is just a very traditional measure. But we also measure the depth, which means is we go into a more qualitative analysis of trying to understand how students have benefited after they have gone through a course of, in this example, Creana. And so for what we measured in that instance is what was the income increase after having gone through that course? What was the ability to get a new job or a new employment opportunity? And these kind of metrics that, even though sometimes are qualitative, you can also sort of quantify to some extent. And then finally, we measure what we call is the poverty focus, which is, you know, is we want to understand what is the population that is being benefited from these companies. You know, is different if you're only not that one is better than the other, but it's different if you're only benefiting, you know, the top quartile, or if you're, you know, like reaching a vast majority of the population at the different income levels. So that's a very quick answer, sort of, to a very complex topic as well. And that, as you point out, you know, many of us impact investors have different strategies.
Thank you.
So for workforce training, there are certain very basic metrics that you apply to everything. Who applies? What are the demographics? Who gets in? What's the acceptance rate? What's the completion rate? How long does it take? How much does it cost? What kind of job do they get on the other end? What's their starting salary? Do they get retained for the first year? Do they thrive in their job? And sometimes people make the mistake of talking about people as if they're little devices traveling down an assembly line, and you just need to add 2 skills onto the device, and then it will function properly in the economy. But also, it's about living a life of purpose and living your, using your full capacities. And so Creana is great in that respect too, because it allows designers and artists and people who are crafting things with their hands to think of themselves as professionals. They're treated with dignity, they're building their skills, and they're moving towards a better career, but they're also doing something that they love. So it's a very special company in that way.
Spectacular. And I think I heard from both of you in different ways that the entrepreneur also needs to really be on board for receiving this type of investment. And, you know, most entrepreneurs have passion, but are they willing to make this extra effort, commitment, measurement, and sort of internalize what impact means in their structure? Laura, I assume this comes up for you guys too. Can you give us an example of one of your portfolio companies, how they've dealt through COVID, and sort of how you approach measurement in this case?
Yeah. So one example in our portfolio that's been, you know, very positively impacted by COVID is an ed tech company that actually what they do is peer-to-peer content to help students go through high school and college. So as you may know, some of you, Brazil has a very particular higher education market where you have a lot of private institutions and not necessarily, and usually most of the students that come from public schools in Brazil end up in these private institutions And there's a reverse effect that the most qualified students from private schools end up in the most qualified public institutions in higher education. And there's a big challenge once these students that are coming from public schools come into the private institutions, that they are able to actually follow through classes and that they have the level of education that they require to be able to follow through and complete their degree. So this company actually does this peer-to-peer, and their target is really low-income students mostly, and how they help each other to manage college particularly. And as you can imagine, because of COVID now, all of the higher education institutions are online, and students don't really have the means or the tools to ask questions to the teachers. And so they have been increasing a lot the use of the platform. And so it's one of that has been very positively impacted. We have another one that has, it's actually very interesting. They have artificial intelligence to help students learn literacy. And so also it's an online solution. It's very, very sophisticated in terms of technology. And as you can imagine, even schools right now don't even have the tools, and I'm talking about K-12 now, the tools to manage students online. And so they've been very requested in terms of help us with the tools, and even public schools have been reaching out to them to use their solution to public schools be able to teach during the lockdown. So these are two examples. In terms of measurement, because again, we're all in-house and my shareholders are, you know, the single family office. Fabio just shared the name of the company, which is Latros, because we are co-investors on that one with Positive Ventures that is on the call. Very interesting. If you can take a look. But on the measurement side, as I was saying, because we're internally, we're figuring it out, but we don't have to talk to external shareholders and explain. But we are doing our own proprietary measurement right now as we speak, actually. And it's very similar, at least in terms of what we're looking into the company. So we look into the type of the impact, the intentionality behind what the company is trying to do. Who are the stakeholders and beneficiaries of the solution? So again, does it serve low-income students or just higher income population is an important factor. Then we look into breadth of how many and scale, but also into depth of what is the impact that it's actually being driven out. And we're lucky that a lot of the companies that we invest are also on their own doing their own impact measurements. So Latros, that was mentioned here, is also, you know, doing a very scientific, together with JPaul, and measuring with, you know, control groups and everything, the amount of learning that the students are able to extract by using their platform, for instance, for 6 months. So a couple of the companies in our portfolio have their own impact tracking mechanisms as well.
Very impressive, actually, and you had mentioned that was their own initiative, right? That they sort of wanted to bring that to the table. Spectacular. We had also discussed, you know, given what's happening in the United States and around the world around inequality, how you guys approach bias in the portfolio or bias in your portfolio companies, and do you have any direct investments that address that? Anyone? Maybe Santiago will go first, because I think you both have an interesting story on the portfolio side as well as your policies internally.
Sure, Julia. So, you know, first internally, we take sort of quality very seriously. We have even, you know, a gender lens investing strategy that goes across our portfolio. It's something we have developed over the last couple of years, and means that, I mean, it's not that we're screening out investments based on gender, meaning only investing in women-led businesses. But actually what we're doing there is that in all the businesses in which we invest, before we invest, we do an assessment of what is kind of the gender equity conditions. and understand what are the gaps. And there needs to be sort of a specific and explicit commitment from companies and management sort of to address those issues, you know, along the way. Not everything can be addressed sort of at once, but there has to be sort of a commitment sort of to support that along the way. And we provide technical assistance, for example, to address that specific issue in our portfolio companies. And more interesting, for example, we invested earlier in the year actually in a Brazilian company that what they do is they use machine learning and artificial intelligence sort of to solve one of the biggest problems that the big companies have, which is recruitment of low-skilled workers. Basically, this, you know, low-skilled workers have a huge rotation in the corporates, and so it's a very big expense and part of the OPEX. And one of the biggest reasons of this is that the recruitment of this staff, or actually majority of staff, is led by humans, and we all have implicit biases, and which range, you know, from the range is immense. But this company, what it's solving is that by sort of automatizing the process, identifying what are the key variables that drive performance, that drive that reduce sort of the turnover of staff, they have been able sort of to eliminate those biases, and you know, for the companies is great. Sort of they reduce turnover, they have a direct impact on EBITDA of the companies, and then from an impact perspective and equity, this company is having a tremendous impact on placing of women and minorities and displaced people population, because as you know, just mentioned, everything is being automatized, then you eliminate those implicit biases. This company, if you want to check, is called Levy, L-E-V. I'll just put it in the chat right away. But it's you know, it's also one of the one very interesting ways sort of to see how technology can help us sort of to mitigate to those challenges.
Thank you. Matt, do you have something to share on this point?
So we've been thinking about inequality from the start, and we started as 4 white men who were angel investing together. Today, we are 2.5 white men and a woman partner, a Black woman principal, an Asian American woman senior associate. We have now backed 8 Black CEOs, of whom 4 are women. That is a meaningful percentage of all of the Black women who have ever in history raised more than $1 million in venture capital. But what's most important is the mission of the companies. And so we have a lot of companies that structurally are designed to serve the most vulnerable, right? So we have one that serves K-12 students who are not native speakers of English. We have another that is focused, as I mentioned, on autism and special needs. We have another that is focused on keeping students in school, preventing them from truancy, absenteeism. And that is not a problem that really bothers the rich. In higher education, our biggest theme is keeping the students in college. And we have 5 companies that are focused on that in different ways. Between them, they cover half of all US college students, and some of them have been proven to deliver improvements in retention of 4 or 5%, changing a lot of lives. So there are a lot of education technologies that don't work at all. And of the few that work, many of them actually serve the rich better than they serve the poor. They widen the gap. And of course, the poor have to have access to a device, bandwidth, and a private space in order to do education from home. That is a hard obstacle to overcome from the for-profit side. Really, that's the work of government. But there are some products that help the people in the bottom quintile much more than they help the people in the top quintile.
And do you think that having diverse teams for all of you has led to more resilience in the portfolio and better serving the stakeholders as a result of these decisions?
Absolutely. It leads to better decision-making in general. The academic research is very clear on that. And in our case, you know, backing Black entrepreneurs is not just the right thing to do. It also is what in finance people call alpha generation, right? Because we are going where other investors aren't.
Exactly. Laura, do you have anything to add to that? Sorry, I didn't mean to not skip you in that section.
I would just add, in our case, what we do is obviously we try to have, starting from our own team, a very diverse team. We do have at least gender diversity, also different backgrounds. And I think the key to that is actually looking for different competencies, because if you're looking for exactly the same profile, then you know, at the end, you're looking for diversity of profile and competencies. So I think when you open that spectrum, then it's when you really start having different candidates that have, you know, diverse backgrounds. We also do that in our companies, be them the impact companies or the non-impact companies, and not only gender, but also age. So one of our companies has a program to hire, you know, seniors. And, you know, behind that is the belief and the scientific knowledge that diversity really does drive better results and better returns. And some of our companies, even in their structure, they address a lot of the gender inequality, especially when you talk about education in general. You're also talking about reducing inequality because you're giving information and knowledge to all of the students equally. Something that we don't talk that much about, but is very true in education, is also the gender opportunity to the teachers. You know? So once you have teachers, and you know, we're talking about looking at all the stakeholders. So we're also looking into the teachers as a very important stakeholder, and we want to treat these teachers and help value the career in Brazil and Latin America in general, which is usually a career that is not very valued. And once you have a company that is a private company, teachers that are usually women, opportunity for growth, of growing within the own company. You can start as assistant, you can grow into a teacher, you can grow into a coordinator, you can grow into a director, and you give them a career path. It's something that if they went to probably a public school option, they will never have this alternative. So there's a lot of impact that drives from what you're doing to the employees as well, offering to the employees as well.
Great point. And then you're creating retention both across this value chain, the teachers, the students attending class, the investors, also connected, in your case, deeply connected to the story and the impact of their investments. So one last question, then I think I need to open it up to the group, although one of the questions that was pending was about measuring impact. But just sort of to tie back in, how has, for you, Laura, for example, how has this path to impact investing potentially connected you more or less with the family that you represent, and what other, for you personally even, has that inspired your role and kept you going in the role that you're in?
Well, for me, it's always been mission almost. I had very clear that I wanted to find this space where capitalism has also a positive outcome, and we have a more responsible outlook into this. The journey within the company has been very gratifying, I think, and rewarding, because in the beginning, we didn't really find the space that we could talk about this and find a frame where everyone felt represented. And, you know, because this is a journey and a process, in due time, we were able to frame it in a way that everyone feels represented, and everyone feels that we're finally getting to a point where there's a lot of alignment towards and around what we're trying to do. So I think this is, for me personally, very rewarding, because as I said in the beginning, I think this is the direction of progress. So it's rewarding to be helping in a very, coming from a very traditional standpoint, to be able to bring the awareness and even the education really around this. Something that we did that was very helpful was to create a responsible investment committee. And we invited basically a representative from every of the asset classes that we have. And it was open to anyone in the company that wanted to participate. And in the beginning, a lot of people came, and in the beginning, we didn't really have a single point of view, and there were a lot of important discussions going on until finally one day, you know, one of the portfolio managers from the hedge fund said, "Oh, now I understand what you're saying. That makes total sense." And we were talking about the same thing. So it was very interesting. And now it's a committee that all of the shareholders participate every meeting. So it's become slowly, you know, one of the important meetings I think that we have as a group. So yeah.
Congratulations on that journey, and thanks to you for a lot of the work that you put in for that. Matt and Santiago, any closing points on, you know, how impact has either helped you connect deeper with LPs, driven performance or resilience, and then we'll open it up to questions.
Yeah, not just resilience, but what Nassim Nicholas Taleb calls anti-fragility, right? The mission means that you can absorb shocks of various kinds and actually use the shocks in productive ways. I wanted to amplify what Laura was saying. I've seen this a lot. There's real pain even in wealthy families. The older generation worry that the money is going to kill the younger generation, that the money is like Ebola, right? That too much of it is not good for them. And at the same time, they want to engage the younger people in stewardship of the money. And the younger people sometimes are not interested in that. And impact investing is the bridge, right? It's responsible stewardship, and it gives the younger generations the chance to educate the older ones. So it's potentially very positive for a family office in family dynamics terms.
Yeah, I've heard many great stories, including in the region where you know, the next gen did not want to participate in the family office, and they actually insisted that the only way that they would be through impact. And I was recently in Brazil last February for an impact conference organized by a next gen who has just become the head of XP's sustainable finance, also an exciting turn in the market. And a whole group of next gens were there pushing their families and their family offices in this direction, you know, demanding that we build the future that we want to see, that we invest in it meaningfully rather than just invest in what we've done before and expect the same, you know, outcomes. So definitely, if anyone is looking to engage their children in meaningful wealth management and legacy planning, this is the way to go. Almost unequivocally. Santiago?
Yeah, Julia, I was just gonna, you know, and saying, in Latin America, we've seen, you know, a lot of social unrest over the last few months, you know, starting from Chile at the end of last year, then like all over across the region, and with all what is happening now is even, you know, in the US. But I mean, we feel very lucky that more than 35% of our investor base are local, meaning from Latin America. And this has been sort of the result of the work of what Laura and Matt are saying, you know, in terms of a new gen and not only new gen, but a new set of business people sort of coming together and realizing that there's pressing need sort of to do things differently, you know, and that businesses have the power sort of to change the status quo, to leverage, you know, all its resources, knowledge, its drive, its efficiency, sort of to battle the inequalities that we've seen in the region over decades. And so I think that's extremely powerful. And you know, as going back sort of to the word that I picked, you know, is the future. I think, you know, that's where we are going, and so, you know, to whoever that is out there thinking about it, I just think, you know, there's no question that we will get there, and rather than sooner than later, as we progress and as we see we're facing even greater challenges these days.
Thank you. And, you know, we'll keep hosting these types of events to help you stay informed and educated. And we're always here to answer your questions or help you on the journey. And of course, you can reach out to our panelists, especially if you want to invest in their fund, except for Laura, who's an evergreen. No, I'm kidding. But we really appreciate you guys joining us, and I will open it up for questions. If anyone wants to raise their hand and speak directly, let me know. You can raise your hand, I believe. Let me just make sure I've allowed that actually. 1 second. You can raise your hand, or you can ask questions in the Q&A section. So Sophia Muñana had asked us, how do your portfolio organizations measure impact? And does your way of measuring align with your methodology as well? I think it's more or less, you've answered it, but if anyone has any, okay, I think Sophia felt it has been answered, great. But if you have any other points on that. The other question is from Crown Hub Consulting. Is there an established correlation between impact investing and ROI? So I think we touched on that a little bit, but happy to hear you guys sort of reinforce that message as well.
So there was a study by Cambridge Associates, which is, I guess, the gold standard in the assessment of private equity and venture capital returns. And they found that returns from socially responsible investment were roughly equivalent in private equity and venture capital to market rate investments. I think that probably after the coronavirus hit, those numbers have changed. I mean, I remember when Tom Steyer, the founder of a large hedge fund called Farallon, said he was going to divest from all fossil fuels. And I was already doing impact investment, even though you know, I was not focused on sustainability. And I thought that seems a little extreme, right? You know, it could be a long, long time before that thesis gets realized. And then, you know, the coal companies, you know, there was one coal company that had a stock price of 50 at that time, and now has a stock price of 2 or 3. Coal is wiped out, and natural gas and oil are not doing all that much better either. You know, since the coronavirus hit, climate change. Well, renewables are growing at an unstoppable pace. There's a kind of Moore's law with solar energy and wind power, just as there is with computer chips. And so every year they get cheaper, stronger relative to fossil fuels. So actually, what you're doing with fossil fuel investments is you're trying to pick up pennies in front of a bulldozer. And it's not necessarily safe or smart. And I think that impact investing involves thinking just a little bit more about the future in general.
Here's another question. During COVID, the biggest obstacle when classes switched to online was the lack of access to high-speed Wi-Fi, evidencing that investing in SDG 10, reduced inequalities, and no poverty are crucial for improving education. Would you support free Wi-Fi distribution sponsored by public-private investments? And would you be willing to allocate part of your investments to that? Great question. Thank you, Claudia. Claudia Elko.
It should be a human right, broadband. Like, how can you prepare a student for life in the 21st century if they don't have broadband access?
And it's shocking to me that parts of the United States still have no broadband. One of the richest countries, or the richest country in the world. I know Europe has put a lot of money into that. I'm not sure about Latin America, but it is a huge issue.
It's got to be solved by the government ultimately.
We have invested actually in one company that is, I mean, their initial focus was access to energy through solar energy installations, and you know, like they've gone a long way sort of in installing solar rooftop for schools and for hospitals in rural Colombia. But one of the biggest needs when sort of after they did sort of several installations, sort of they realized that installing sort of energy itself, it was great, but it was not enough. And so after a few months, actually what they created is that their product goes along with connectivity. I mean, they sort of rejected the idea of installing only solar rooftops. And every time that they're doing solar installations in rural Colombia, they go with connectivity. That's how important it is connectivity these days and how relevant it is. And it's something that government can provide, but I think it's also something that businesses can provide. And yeah, I just wanted to share that example.
Thank you. Great example. Another question here. I'd love to hear some of the challenges. Well, this is a specific regional question, but some challenges in impact investing, both from the entrepreneur's perspective, as well as, in this case, it was referring to Africa, but perhaps a regional outside emerging market challenges that perhaps a US company doesn't face.
Well, challenges are also opportunities. So, emerging markets skipped landlines, telephone landlines to some extent, and went straight to mobile. And we're seeing mobile-first educational solutions emerge in emerging markets before they emerge in developed economies. There are opportunities. There are lots of challenges, particularly when working across a multiplicity of small nations, which may have different baccalaureate standards, different currencies.
In emerging markets, one of the biggest challenges that entrepreneurs and businesses in general face is infrastructure, lack of it, right? And you name it, it could be roads, it can be connectivity, it can be energy. There are so many types of it. But I think, as Matt was pointing out, there is those challenges sort of represent also very interesting opportunities, kind of also to leapfrog to the traditional model. And we're seeing that in different spaces. Sort of, it was mentioned in the context of Africa. Clearly, in Africa, for example, access to energy is a sector in which the lack of infrastructure was so big that it was just impossible sort of to continue investing in connecting the grid. But with the emergence of solar energy and off-grid solutions, then a whole new sector is being developed sort of around that concept. For example, the other, I think, very good example is the banking system and payment systems. Is usually in the past sort of you needed sort of a financial institution, you needed to go to a bank, you needed to go to a branch. Right now, many countries, and especially in the rural areas, are leapfrogging this with mobile payments. And so clearly there are challenges, and some of them are related to infrastructure, some of them are related sort of to ease of doing businesses and regulation. But at the same time, this I think it creates very interesting opportunities, and I think especially technology is being a great source sort of to overcome these obstacles.
Thank you. Laura?
Well, I think for us, we are very focused in Brazil, Brazil has so many challenges, so I couldn't relate to Africa part, but at least a little bit of what Matt and Santiago are saying, because we have to leapfrog, especially when we're talking about education. If you see results in terms of the quality of education in Brazil, PISA results, we need to leapfrog. So, while some developed countries are talking about social emotional learning, we have to do math, Portuguese, English, and social emotional learning. So I think there's room for innovation. And I think Brazil can be a country that will develop solutions that can be a hub for solutions in other emerging markets. So Brazil is a large enough market for us to really test this out and maybe spread them into other emerging markets with this notion of leapfrogging. And probably the solutions that apply to Africa will come mostly from places like Brazil or Latin America rather than Europe or the US, because it's really different reality.
Great point. And that's something, we talk about impact investing too. Sometimes you can scale ideas that are high impact from other nations that have similarities rather than reinventing the wheel, and sort of where do you balance that? We have another great question from the audience. Carlos Vasquez asked, there are different opinions on what it means to be early stage, and our work with teachers helps them create prototypes for tools that they need and aren't finding. awesome idea. You guys should learn more. What advice do you have for them or other early stage entrepreneurs who don't have access to a network or revenue that can get them to the next level from prototype?
We've backed a number of teachers like that. There's a kind of entrepreneur I call the authentic entrepreneur, who doesn't set out to start a company. They set out to solve a problem for themselves, and then they accidentally find themselves starting a company. A lot of the biggest K-12 technology companies in the US were started in that way. And we have one company that was started by a Chicago public school teacher who was just tired of grading student papers, correcting them, and discovering that nobody learned anything from those corrections. And so he built a simple online resource to help teach the rules of grammar and punctuation in English. And it sort of took off. And next thing he knew, he was running a $10 million company.
Amazing, that's a great story. And who funded him first? Was it you?
No, it's a long story, but I think Mitch Kapoor.
Oh, interesting. Yeah, another high impact investor. Anyone else want to comment on that? Are any of the portfolio companies in your portfolio, Santiago, Laura, started by an educator that you're aware of? Yeah, also?
Yes, the founder of Letras that I mentioned.
That's right.
And his first project was a nonprofit project that taught children literacy through incentivizing them to write a book. So it was write your first book. And so, yeah, he's a teacher.
Excellent.
So empathy is a critical business skill. And so understanding who the customer really is essential. A company has to have someone who comes from the customer set. Doesn't have to be the CEO.
Very true, and that ties back to the stakeholder connection and not it being, a group of people solving a problem they don't understand, with the profit motive being the core aim, especially in things like education where quality is so critical.
I hate the kind of education startup that says, we're from Google and we're here to help. We're here to show you how it's done.
Right, exactly.
Because there's an ambivalence in the concept of having education for profit, right? Latin American and Brazil, it's very strong. I mean, a school is a not-for-profit, it's acquired by a professional fund, and then all of a sudden parents are freaking out. And so there's this place of proving that a for-profit education model can also drive a lot of quality. And that it's not just because you have a for-profit education that you're going to compromise on quality. And I think that's something that's very important for us to be, have our eyes open and focused on this so that we can really demystify this, this myth of education to be a high quality has to be not-for-profit. So we do have a couple of examples that don't help, but and I think on that, having someone that really focused on education in these companies doesn't have to be the CEO, but really having, really having substance into what is it that you're looking into education is really core.
Excellent. I'm going to ask one last question, then we'll wrap it up. Thank you all for staying engaged and providing these great questions. This is from Daphne Salinas, who's also an impact investor. In the post-COVID world, what do you think will be the most exciting opportunities to invest in education? What types of solutions would you like to see?
So the obvious answer is the biggest opportunities right now are in workforce. There are some opportunities in K-12 and traditional higher ed, but there's so much blue ocean in the workforce area. Everyone has to learn more and more just to stay in a job. And people are out of work and they urgently need upskilling. So I think one of the things that I'm looking for is really rapid upskilling. You might call it minimum viable upskilling. How do you take this person who is unemployed and has these skills and give her one course or 2 courses, 4 weeks, ideally for free, and get her to a better job?
I couldn't agree more with Matt, but I would just want to add that there is another dimension. And by the way, hi Daphne, good that you're at this session, is that I think that the COVID is highlighting sort of a huge need of implementing the technology tools across K-12, which is something that is lagging. I think I speak mainly about sort of Latin America. I'm not really an expert in the US, but it's something that is really sort of lagging in the region. And you know, there is a sort of a massive need of implementing these tools, standardizing the way that teachers communicate with parents, the teachers communicate with students, you know, that how you can get sort of adaptive learning as well to students while they are at home. And you know, there are interesting sort of opportunities out there, but I think there is need sort of to really scale those solutions. I think there is a massive need also to involve governments in scaling these solutions, because this cannot be only sort of a source for private schools, you know, that usually are for the elite across Latin America, and you know, those sort of businesses that are able sort of to navigate through that ecosystem, which is quite challenging, but there, I think there is just a massive opportunity there.
Laura, any final words on that? Okay.
With Matt on the scaling and workforce, and I think it has you can think about things as programming and technical skills, but it can be as simple as English skills. You know, in countries such as Brazil, just having an English skill is already something that can differentiate a lot. And I think the economic downturn that we're going to face post-COVID will require people to really think about how to find revenue in you know, non-formal jobs. So giving the tools to be able to help in this process, I think, is clearly a big theme.
Wonderful. Well, thank you all for your time, for joining, for listening in. I really hope you enjoyed the conversation and learned a lot today. If you have any questions, please, you know, if for me or for the panelists, send them over to me. If you guys need any more information on impact investing, come to us at Invest. All the people here, I'm sure, would be willing to help out with any valuable questions. And we look forward to having you at the next webinar, Invest webinar, 2 months from now. Thank you so much.
Thank you.
Thank you for having us.
Thank you. Bye, everyone. Have a good evening.